Welcome to first and only SaaS News Digest featured on LinkedIn. And today's digest brought to you by Vanta. Vanta makes it easy to get or renew your SOC 2, trusted by Lattice, Notion, user testing companies. Avoid the anxiety of on-site auditor visits and save $1,000 for SOC 2 at vanta.com/buildfirst. Our first digest today takes a look at Dynatrace, a SaaS leader in cloud monitoring and analytics. Investors seem to have lost interest in the company lately after being a crowd favorite early in 2020. Dynatrace is expected to stabilize revenue growth rate around 22% year over year. But the stock pricing plays at just 14x forward sales, making it for a meaningful discount that may be worth considering. Dynatrace boasts an ARR that continue to hover over 33%, and they have over 120% dollar-based net retention metrics thanks for the solid land and expand strategy. The rapidly growing TAM places Dynatrace in a great position moving forward. Dynatrace is expected about $675 million for fiscal year 2021, which finishes in March. If growth rates stabilize, that means revenue should hit over $825 million for fiscal year 2022. The demand for cloud observation is steadily increasing as visibility and control become critical business needs. Dynatrace offers an all-in-one software intelligence platform. Those appeal may be worth a closer look for investors. COVID-19 has accelerated digital transformation across almost every industry. Many tech trends may be temporary responses to the pandemic, but other trends are here to stay. And some of those tech trends are helping to fuel M&A landscape. One trend expected to last well into the future is the growth of the low-code movement. In reality, the use of low-code just growing before pandemic. And according to Forrester in 2019, over a third of developers were already using low-code platforms and products. And Gartner predicts that 64% of all app development will be low-code by 2024. Democratizing app development solves a very real and long-term demand for rapid app deployments. One case study for this trend is Google Cloud's new version for the app development space. They purchased AppSheet so that the customers could leverage the development platform to modernize business processes. And this enhances Google's ability to adapt to customers' future needs and maybe put them ahead of the curve. Another trend fueling M&As is the desire for augment and in-house capabilities. Strategic acquisition of the companies with a necessity tech can be a smarter answer than developing solutions in-house. Take Cisco's plan to purchase Bubble Apps to improve the WebEx video meeting experience. Bubble Apps already processes AI speech technology that eliminates unwanted background noise. And this acquisition solves a very real problem for Cisco and makes sense for both a tech and timescale perspective. And the final trend fueling M&A activity is that of the enterprise automation. Salesforce acquisition of Slack speaks for this wider technology trend. Slack provides Salesforce with ability to monitor and data passing back and forth in Slack. And this can help them to expand their ecosystem and integrate new capabilities using a solid model for distributed communication. The critical insight that Slack provides into SaaS apps usage and trends will help Salesforce remain competitive force in a changing world. And our final digest today examines the post-pandemic role of robotics. They remain a primary area of interest for manufacturers, and organizations continue their efforts to remain competitive in a digital workspace. Though COVID-19 negatively impacted the market, ABI research analysts expect to rebound significantly in 2021. Interest in robotics has actually skyrocketed in response to the crisis, but experts caution that the significant acceleration in adoption depends on better strategies. Adoption also depends on more operational experience and more supportive ecosystem of adjusted tech vendors in cloud, cellular, and AI spaces. These adjacent tech vendors will become increasingly important as the developer new hardware and services will provide instrumental for robotic adaptation. Boston Dynamics analysts also see a positive future for robotics in 2021, and they believe that the growing need to remove people from hazardous working environment will fuel the adaptations. Companies also look into technology to help protect their workers from infection, and this desire is driving them to automate tasks with traditional tools, robots, and drones. And they're doing it all with the name of safety. Boston Dynamics experts see automation wave expanding to include even more business processes. And this can range from traditional manufacturing jobs to processes involve construction and utilities like oil and gas. But expert caution that it is important to set realistic expectations for those groundbreaking technologies as we move forward. Transforming processes to include robotic automation requires team focus, but can ultimately lead them to more jobs and safer work environment for all. I hope you enjoy SaaS News Digest. The SaaS News Digest belongs to all of us and provides value to the members of our community because of you. So please click on like or insightful button. Share the SaaS Digest on your LinkedIn page, and let's work together in developing this community and setting new SaaS global standards. My name is Artem Gassan. I'm the general partner at SaaS Growth Ventures, and my superpower is I solve growth and revenue problems for tech companies. Thank you for watching, and I'll see you next week.